Hey, good morning, my neighbors. Welcome to another episode of that BYTTT that you know and love. We're gonna go ahead and get right to it as we go. We're revamping everything a little bit. All right, so without further ado, let's go ahead and get into the charts. The first thing I'm gonna kind of recap is the fact that NQ had made some very major moves. And if we look at this from a daily standpoint, so if you look at this daily, the way the daily is just going and it's like almost like cascading its way down. If this low goes out, the one that we put in on Friday, and they go below this level, there's a possibility we'll come right outside of that order block. And that's the question that we really have. There is bearish divergences all over the place. If we squeeze this chart, you'll see we made new highs here, but the oscillator is not following suit over here, and likewise in this area as well. So this is going to be very interesting to kind of see the dynamics of how the market responds to this information. Let's go ahead and keep this going. We got oil over here, and again, I'm just explaining this to y'all so that way I can be fully prepared. I'm looking for oil to go a little bit lower than where it is. Unfortunately, it took contract expiration to finally get to that price level. So I am going to seek for us to try to fill in this gap and probably push back up into that upside. We'll see if the market can do so. If it does, it might be enough momentum coming off the block here, because you could see when we made these spike ups, it came off of this block here. So look forward to that. This is gold, and the way gold is moving is still inside of the channel. It's trying to make higher highs, which is not giving me a lot of confidence that a lot of bulls are willing to pay these higher prices. So look for this to possibly look for a level. If they're looking for a certain level, they might be looking for a level of a 50% retracement on the weekly, and that will be this leg right here, which again, this is possible. I'm not saying this is going to be the answer. So we're talking about maybe about there. Let me put this on regular mode so you can kind of see what I'm talking about. Right, like yes, something along the lines of here, right? So we're talking about a 50% retracement to about here. We got real close, and that's why I thought we was going to get a nice explosion off the 382, but you can see we are failing to do so. So look for this one to possibly take another shot. Silver is trying to make its attempt to try to go ahead and push up into that $40 level. The problem with silver, if it's actually going to be able to get there, it's going to take a little bit more work to do so. So a nice pullback probably going to be a little bit more feasible, because this whole entire leg is not doing it much justice. We're starting to wedge the price a little bit tighter. If we go over the British pound, the British pound is still pushing up, but we're still sitting in that order block, and it's trying its way. Oops, let's put you back. It's trying to make its way continue to this upside. We did penetrate the right shoulder, which is starting to make me think that this whole entire downtrend is in trouble. But if they use this order block as an accumulation phase just to dump it even further, I think we could get the full entire extension to the measure move. But this would not be considered a head and shoulder anymore. So I am going to consider this a possible weakness, and maybe we'll make a higher low, probably around that 13275, maybe a little bit higher. So just keep that in mind. It's actually tried its best to get up into that upper register, which would have brought us into that 125 level. That's what I was kind of looking for, but unfortunately it stopped right at 124,533. Now the question behind this is, there was a lot of bearish momentum that brought us back into the order block after the close above, and then they tried to hold the second order block, and you can see that failed royally over 3 days. So now we're starting to get back into that fair value gap. If we break below this level, look for this day to probably come back into that 112, 110, maybe even come down to 108. It's been a while since we've been down there. That's roughly around July. The next one we're going to be looking at is the Russell. Now, the Russell is in a very interesting spot, especially if we're trying to get out of the large cap and get into the small caps. Look for this thing to close above 2,300. It's a strong possibility we could get that. And if we do, then they could put some real pressure on the bears and start to really pivot the market to the upside. But there is a bearish divergence down here, so it's going to be predicated on how the reaction here. I only want to see this close above today. Tomorrow, it might not be nice, especially the fact that we broke out of this range. I want to see what this test really looks like, so keep that in mind. Last but not least, we got the US dollar. The dollar is trying its best to hold its level, and it's not going to be denied. It's trying to make a nice little push. We might go back through this order block, and if we do so, this is going to confirm the trend line that we created back in the middle of early July. This was that nice little push up, kind of made higher lows with some higher highs. Could this be our pivotal point to go ahead and create more higher highs, putting some real pressure into the market and filling this imbalance that was back in the middle of May? If you don't remember, May, April-ish, around that time is when we really took some strikes at the dollar, made it drop, and that's where we got a lot of that April rally from. So this is going to be a great question mark to see how the market responds to it. But if this breaks right through this zero line on the MACD, we might put some real pressure to the dollar, keep it going down, and we could have some more upside. So just keep that in mind. All right, go ahead and pull out a pen and a pad. We're going to go ahead and give you the news, and it's coming in a little spicy today because we got the economic calendar that is going to present us with a lot of information coming in for this week. So the first thing that we're going to be looking at, this is bill auctions. Of course, Mondays is usually our slower days. There's not a lot of stuff that's going to happen. So I could picture that this right here is going to have a nothing burger on the US dollar. So you're going to probably see us drift down. Probably don't break this trend line as the market try to dissect what they're going to plan for the week. And then on the 19th, you got some Canadian stuff that's coming in for their inflation rate. But on Tuesday, we're going to have a Fed speaking with some housing starts. Now, this one's going to affect your D.R. Hortons. Toll Brothers is also reporting. So this is going to answer a lot of questions as the reports are starting to come out. And then when we get over to Wednesday, remember, we always have oil inventory during that time. So you want to keep that in mind. And then we have Fed Waller going to speak. And then we got a 20-year bond. Now, the tricky part about this 20-year bond is that we're going to get the drop of the FOMC minutes. Now, don't get it twisted. FOMC already said what they're planning to do. We're going to get the minutes and the details. Then sometimes there's some Easter eggs inside of that says, hey, it's confirmed that it's going to be September on the cuts or something along the lines of that, or how people are voting in the middle of the meeting. So this is going to be very critical. So I would say out of all days, as far as volatility, you want to stay out of the market. If you're not in deep profits by 2 o'clock, take a step back and wait for that thing to relatively settle. All right. Fed's Bostic is going to be speaking. And when we get over to Thursday, jobless claims is going to be placed right over here. And this is going to be very tricky as far as the market responding on what it needs to do. And then we're going to get some PMI information, S&P Global. And then we're going to get some bill auctions again. Rates. This is another auction that I'm curious about. This is the 30-year tips. And then you're going to need the Fed balance sheet. I'm looking for these two plus the one from the day before to kind of dictate what that Fed balance sheet is going to reflect. I'm looking for them to continue to divest and go ahead and allow for the market to kind of rebalance itself, because they've done a lot of manipulation from the Fed standpoint, allowing for them to try to get things to reset, but they haven't broken anything. So we'll see what happens with that. And then last but not least is Friday, and there is almost nothing there. Stay away from the market during Jackson Hole. That's the best way to say it. Jackson Hole. So at 10 o'clock on Friday, there's going to be some volatility because you already know Jay Powell's going to Jay Powell the market. Fed chair is going to speak. And then Jackson Hole Symposium is going to be overnight. I do not suggest you carrying anything over the weekend during this time unless you're in deep profits. Very important that you plan accordingly for this week, because there's a lot of caveats that's going to play a major effect into the market. All right, so I gave y'all all the information that I can give y'all. Now it's time for us to get into some of the news that's going on. I love just going right over to CNBC. It's usually buy the rumor, sell the news, because if they're already telling it to the news, they're getting people that don't know to position themselves. Let's see. That's a very good question. And I like Amazon, so we might go that way. Oh, this is good. This is one that came on Friday, so we'll do that one, because I have question marks on that, and I think I agree with them on Morgan Stanley. So this might be one of those buy the rumors. Now, okay, I got. Let me give you a caveat. I'm going to give you a nice little caveat. So let's start with this one. So here's Amazon, right? Amazon expansion of grocery delivery isn't the death knell for these stocks, right? And let's think about this for a second, right? Amazon has its own proprietary delivery system. Plus, they have one of the larger, not largest, larger grocery chains with Whole Foods. Plus, they already got their Amazon essentials that they have going on, and they're mixing a lot of things of them creating their own products to sell amongst their own delivery system. So I agree. I think there are some things like, Instacart, DoorDash, and Amazon. I think people are looking in that perspective. Don't even put Uber in the conversation of that because, again, they have their space with the Postmates, but a lot has died off. They're more in that delivery of food, even though DoorDash kind of does both. So let's take all of deliveries as a whole. If you really think about it, everybody has their nuances, their contracts, and their exclusivity rights, right? And then you got the fact of some individuals are looking in the perspective of the space that is going to be created for themselves. So let's look at Amazon's grocery delivery. Yes, it is expanding. Yes, they have a lot of nuances to it. It's a really, really good feature. I know some people that does it. And the way that game goes, it's really very proprietary, and they already got a lot of their stuff from Amazon deliveries for their products for Amazon.com. So what I would suggest to you, if you're going to go ahead, it doesn't matter if it's Amazon Fresh, doesn't matter if you're going to go to Whole Foods, it doesn't matter if you're going, like, there's places that's like, if you want Whole Foods products, you have no choice but to deal with Amazon. And I think there are some Whole Food things that people prefer. Now, when it comes down to DoorDash, Instacart, they do have some flexibility where you can kind of like that old school Postmates thing where you can ask them to run errands like they're your personal assistant. That's the factor that you're probably going to be banking on with those stocks. So I won't say, I will agree to a certain degree that this is not the death of any of these particular tickers, but it's just going to allow for others to have other services that's going to give them their products that they're looking for. So let's keep that in mind. Don't look at delivery and Amazon only. Amazon is bigger than the delivery. Their AWS is what it is. Amazon is a lot bigger than what they are. Amazon's AWS services is one of the most sought after, and that's why they are where they are. And then you got the fact that they are the major distribution point for a lot of small businesses and anyone that wants to go ahead and be like a mid-class business that don't have their own delivery system. So I think they really own that portion of it. After that, these are just niches. DoorDash, they're in the delivery of grocery and they are in the delivery of food. Instacart, only groceries. Uber, only food. The next topic we're going to talk about is Clorox. They're saying Clorox has found the bottom over at Morgan Stanley. I think this is a rumor that is possibly the news at the same time, because if we look at the chart, it has been at its bottom. And if we look at the ghost bars that I did a couple of shows ago, this was what I was looking for a nice little upside, but they pulled it back just a little bit deeper than I'm comfortable with. But if you really follow along the lines, it's not too far from the trajectory. I was looking for a target somewhere here, and it looks like they're looking for some friends, and that's probably why they released this news, is because they're looking to see, hey, this might be the bottom. A nice little break of the 132 will push us probably into that 135, tested the 200-day moving average, and getting us to that 138. Now, Clorox is a lot bigger than what you think. It's not only cleaning products, and they've been on a decline ever since the pandemic. No longer needs so much cleaning products, and I think this is a false equivalence. If you really think about it, they also have other products outside of cleaning. I don't know how I feel about Hidden Valley Ranch being one of them, but again, that's what they cover. So just keep that in mind. It pays solid dividends, so we'll see what happens there. So that is the end of the news. So let's go ahead and move on to this week's earnings cycle. So we got a couple of things that's coming in. Again, this is the tail end of everything. In 30 days, we're going to have quad witching. So we're going to start to get some fumes as far as all the earnings that's coming in. So the first one I would like to cover is PanW. This one is in the space that I really hold dear. It's cybersecurity. They're anticipating an EPS somewhere around 0.88, which is a real solid number coming from the last previous quarter as they're trying to increase. If they can get it to $1, I think this thing would shoot right back up to that $200 level. in revenues, 2.5. So this is a good pullback, especially in this space. All right, so if we look back here, there was a bit of a head and shoulder here that I was looking at. And this one I hold really, really dear as far as the AI space. For AI to really do what they have to do, it's going to require a lot of security, and PanW is one of the ones that's the leader in the space. Now, this one did make a split so that way they could get some more investors in, and you can kind of see it's been a little stagnant. Sorry, not as stagnant as CMG, but that's a whole nother conversation. But it's been a little bit stagnant, so we want to see what they're going to do with these levels. If we really think about it, this order block is what was holding us up for this head and shoulders. So could they create a range here and get us back to 200? And that's what I want to go ahead and see and look forward to. Let's talk about tomorrow. Tomorrow we're going to have Home Depot. Now, Home Depot's earnings is going to be something that's going to be very critical too. I think when we made this whole entire move off this bump and run, shout out to those that played the bump and run in some of the communities, because this thing was a nice solid move. We got up from 340 and we're up to almost $400. Actually, we shot past $400, almost got to that level. So I think this is a nice little retracement so we can break out of there. It does pay dividends, but it's not a fan favorite. It's still solid nonetheless. So I want to see what this ticker does when we start to get outside the block around 420, which I think is very attainable, at least for a test before they start to really take their profits and start to come to the downside. Also, we got MDT. This is Medtronic. If you don't know who Medtronic is, this is one that is really, really big in their space. They do a lot of medical electronics. And you can see EPS 1.22. And then you got dividends, that's 71 cents. I know it's still not my fan favorite, but it's decent nonetheless, right? And then you got a earnings of estimate of 8.3 billion. So there's a lot of revenue here. I like seeing stocks that has where they meet their numbers and they actually beat their EPS, finding some extra money. I like when they turn around and they lose money, but they still find a way to give money to shareholders. That makes me think that they do more with less, and all they have to do is do some cleanup, maybe do some terminations, layoffs, or whatever the case may be, or they could go ahead and negotiate with suppliers. That's what I get when I see stuff like that. So keep an eye on this earnings. If they beat both after cleaning it up from this level, this whole entire run was them cleaning it up. If that's the case, we might go ahead and get some more highs. Maybe even get back to some of this register around that 106, 109. If they announce raising dividends, that'll be solid. They've been at 71 cents for a while. So Medtronic, keep that in mind. Looks like it might be even building a wide base. This is just one long range using that 800. So just keep that in mind. I like this ticker right now. Let's go ahead and keep this going. We got Toll Brothers. And Toll Brothers is probably the Uber in one case. That would be probably like, that'll probably be like your DR Horton. Your Lennars will probably be more like your quasi-taxi to a little bit of a limo. This right here, Toll Brothers and Pluth, is kind of like your private driver that you have on payroll, like a Farnsworth Bentley, right? This is one that I like to see whenever I start to get back into the real estate and home space, because when this starts to run, it usually runs nice solid move. This one here, nice solid move. So this is the momentum that you usually get from something like that. Now, they do return money to shareholders, which is solid, and this is 3 billion shares floated. And what you got, I'm sorry, not $3 billion in revenue, but the shares floated is what I always like out of this ticker. It's only 97 million. So when this thing starts to push, it pushes relatively well. The dividends are crap. I'm not gonna lie to you, it is, because this space is very volatile. All it takes is an economic crash like we did in the housing bubble, and this company can go under. So I think them giving more on the growth side, being the upper echelon of home builders, is what I like to see from here. So keep an eye on Toll Brothers, as this thing looks like a very solid move. And if we take a, yeah, this is a very, very solid move, and I like where it is. Now, I'm not in for a long time, but I am in for a good time, and I think this is one that can give us done. Now, a couple things in the earnings cycle that I'm looking for. Over in September, I'm probably going to be looking for Netflix. We've been making some moves back up. It's like we kind of came back. I really wanted that 1100 area, but it looked like 11.2 with a sweep is what they were looking for. I don't think the downside is over yet, okay? If it gets up into this register, this is where we rejected back in June, and then this thing could go ahead and push and make some lower lows, and I finally get the 1100 price that I'm looking for. So just keep that in mind. If it rides this current trend, we're gonna go ahead and continue to push to the upside. All right, we got Meta. Now, Meta did make me a little mad. It started giving that Microsoft vibes where it was drifting up, and because I had September contracts, and we were coming to CPI data, I got out of my position with a solid profit, but I think I could have had more if I bought more time. But again, I'm just here to make some money and not trying to make things difficult. Look out for this gap because we keep coming around here and they're trying to test down to this level. 784 is where we are right now. I got it to 796. My target was 800 and we're literally knocking at that door. So we're going to go ahead and keep that in mind and seeing what is going to be the end result for Meta. All right, going into the second month, which is the month that we're relatively on, let's take a stab over to Affirm. Affirm is trying to make its stride back up, and this one I feel like it was the funny thing about it. Upstart was moving, Affirm wasn't moving. Upstart starts to fall, Affirm starts to push up. So this is a very interesting dynamic that I'm starting to get a pattern here, because if we go over to Upstart, they are down something very drastic. We've covered this on the show a couple times. I was looking forward to get to that $100 level. I had to cut my profits on this one. Good thing I did, because they really made some massive moves to the downside. And the difference is between Upstart and how it's responding in the market, it's in a different space with a twinkle of buy now, pay later. So I'm very curious on what results here. I think this is a prelude before they start to really rally. I think they're waiting for Affirm's earnings to happen. And then afterwards, we're probably, where are you, Affirm? Don't be hiding away from me. And when they finally get their bearings, then they're going to go ahead and pivot off of Affirm because they're deeper into the buy now, pay later space, and then start to go back into Upstart, which is a little bit more safer. So we'll just keep an eye on that. And then last is going to be what I'm thinking is going to happen a little bit later. We got CrowdStrike here, and I want to see this one here. This is going to be fun. This is going to be later on in the week. Pan W is about to open the door. Depending on how Pan W responds, we're probably going to get a CrowdStrike response with a Zscaler, Datadog, and all of the ones and such, and see what type of response that the market has for it. I have Datadog in here. D-Dog, where are you? All right, and that's going to dictate how the market responds as far as the cybersecurity space. Here's D-Dog. All right. So that said, I want to say thank you very much. Don't forget to hit the like, subscribe, and the bell button, because this allows for the algorithm and everything else to tell them, hey, you know, that boy JD, he kind of gives some good information, and you might want to go ahead and push your boy. Thank you to all my subscribers. I want to say thank you, because it's like, I didn't think I'll be at 300 and some change, but now I just got to get to that 500, and y'all really are helping. So thank you for participating, thank you for responding, and thank you for subscribing to a channel that, again, I just like looking at the market. I'm not a fiduciary, I'm not a financial advisor, I'm not none of those. I just like looking at charts. I like to share the information I have. I make a little money in the process, and I don't mind sharing it with y'all. So I hope y'all like the new lineup. I hope you like the new setup. The goal is to try to condense this as much to 15 minutes as possible, so that way not only you can get on with your morning, but it prepares you properly in the most easiest and cleanest way. So thank you for taking the time, and I'll see y'all tomorrow, same BYTT time. Have a great day. Bye-bye.